Price action rules allow traders to stay on the right side of the market and to read the structure with confidence. And speaking of price action rules, there are two rules that I'm following when I'm watching a price action like this. The number one rule that I'm going to follow right now is the trendline rule, which says after break of a channel, traders expect for prices to create new extreme. And if I see on a chart strong bullish rally like this, my goal as a price action trader is to identify a possible trend channel line. I'm just gonna connect the swings, copy it, put it at the top, and this is nicely fitting bullish uptrend. Prices are fitting neatly inside this channel. So as this channel is in play, I'm only looking for buy setups. Now also the second rule that I'm going to combine with the trendline rule is a trend range rule. Okay, for that reason I'm drawing the support, I'm drawing the resistance because I want to stay on the top of the market. What is the current bias? Okay, so the bullish rally was very strong from the very bottom all the way to the top. Prices never touched the exponential moving average. This is the supportive indicator 21 bar EMA. And notice prices are correcting all the way back down. So my goal is to redraw the channel again, because there are always small channels, even the corrections, not only the big pattern, but also the correction. So as I see this one leg down, I want to go long because I expect for prices to create new extreme, but I cannot go long just yet. I will need to wait for high probability setup, which would be a two-legged pullback, second entry long. And notice prices are correcting to the exponential moving average. We have a break, new low form for this downtrend. We have first leg down, correction, second leg down, and prices are finding support at the very important key level at the exponential moving average. And right here, the two-legged pullback correction played out. The correction phase has ended and push phase may start again. So I'm following the bias, which is bullish. I expect for prices to create new high, and this is a second entry long high probability setup. This is a textbook high probability setup, very easy to identify, no conflicting patterns. And notice market created additional setup, which is right here, high low, because we triggered one tick below this bar right here, so the pullback occurred and we form high low, confirmation of this second entry long. So if you're not sure whether you want to take the second entry long or not, this high low right here is confirming that this two-legged pullback is valid. The exponential moving average keeps holding prices, and this is a second high probability setup because prices going to trendline rules still need to get new extreme. And notice prices created new extreme. So textbook price action, as easy as it gets, back to back two high probability setups. Now, after new high was formed, this is where traders expect this bullish move to be over. Why? Because I'm going to zoom out. I can see that we are in an overall trend range structure, which means that according to trend range rules, most breakouts of trend ranges will fail. And now I expect this breakout to fail because uptrend finally played out. Bullish momentum created new extreme, so there are no more buyers. Sellers are going to jump into the market, and notice prices are correcting. However, I can see that the lower high confirming the failed breakout is a bullish signal bar, which I cannot tell, but there is additional setup that I anticipate at this point on, since I expect for prices to reverse back into trend range, which that's a very high probability because I'm combining the trendline rule with the trend range rule. Most breakouts of trend range will fail. This was the breakout out of the trend range. 90% of these breakouts will pull back into trend range. I can wait for a failed second entry long, and notice we have a new high. This is where we set the count. First entry long, pull back, second entry long, failure. Big bearish bar, managed to close below EMA, and this is failed second entry long. You expect for prices to go all the way back into trend range, and this was my first trade for today. So you can see that the second entry long here is high probability setup because the uptrend is bullish and you need new extreme. After the uptrend has played out and you're switching to trend range rules, right here the second entry long is going to be a trap because it's under wrong context. So this is the difference between a valid two-legged pullback and invalid two-legged pullback. The difference is in the context. Okay, this is why you draw these channels, to recognize the break new extreme and to follow the trend range structure, so you know you're not drawing any wider pattern and you're expecting for breakout to fail. At this point on, if you're watching this, you're still expecting possible lower high confirmation setup of this failed second entry long, but it was a bullish doji. After that, the signal bar was way too big, so unfortunately you miss the setup and there was no great setup at this point on. Actually, the channel is better fitting something like this. This is what I had at the time, something like this. I actually extended it. I don't want to play the overshoot. Why? Because we're coming from the failed breakout and I expect for prices to go down. There's a strong bearish bias at this point. And notice, count reset, First entry short, pullback, second entry short. Short-term option is in play with the break new extreme, almost new extreme, but the EMA is coming to play. Is the first leg up, pullback, second leg up. So now that the bias has changed and the bias is bearish because we came after failed breakout, this downtrend is in play. So after break of a downtrend, you expect for prices to create new low, just like you expected new high. And this is a second entry short. This setup is a little bit more aggressive. However, I will mark it because the setup is not touching perfectly the EMA. However, here's a little caveat. Since you're coming after failed breakout like this, specifically in this situation, sometimes a second entry short like this will not fully touch the EMA. So more advanced trader with experience can go short here because all other context and price action rules basically still align. So second entry short, barely touching the EMA, very close. So you expect new extreme, and notice prices created new extreme. So downtrend played out, and right here, I'm just following the price action. What I'm going to do, I'm going to follow the shortened channels. You can see flat EMA, getting stat, no clear bias. At this point on market open, so I don't want to be trading the run during the market open. Okay, market is working lower. So going to redraw the channel. Okay, I'm leaning more bearish, but at this point on, okay, we have overshoot and we have strong bullish push up. So you have new low, first entry short, you're expecting to get a failed second entry short above EMA, but you never get it. Market push way too far up. So what I need to do, I just need to keep redrawing the short-term trend lines. Right now, we're just going sideways in this main trend range. So pretty much, I'm just looking for decent high probability setup, which I don't get. Notice breaking new extreme for this uptrend, indicating bullish momentum played out. New high, first entry long, pullback, second entry long, failure. Can I get failed second entry long? I can. I'm going to redraw the channel. So notice the downtrend is in play. So I'm just sticking to these rules inside of the trend range. Short-term patterns is always your best bet inside of the trend range. Don't be too afraid drawing them tight. Uptrend played out with the break new high. First entry long, second entry long, failure, but it didn't fully close below exponential moving average as I would like. It's a shame, otherwise this would have been a great high probability setup. I cannot mark it as a high probability setup, but you can see, study the price action here. Market eventually created push down. So the context wise was good, but didn't close below EMA. And notice, we have a break new low and another push above EMA. Okay, so if I'm going to pay attention to the structure, clear flat EMA, trend range structure, and we have some support forming at these lows. So at this point on, we have a smaller trend range inside of the main one. We have new low, first entry short, second entry short, failure, but it's too far up, too close to this resistance. Break new extreme. Okay, we're pushing lower. We're pushing lower. Okay, we're still below EMA. We have new low, first entry short, pullback, second entry short. Now notice the same pattern right here. Shorten uptrend with the break new high, resistance coming into play, rejection. Shorten uptrend with the break new high, resistance coming into play, rejection. But at this point on, what I can do, I can redraw the channel. New low, first entry short, pullback, second entry short. But it feels a little bit stagnant in the middle. I would prefer to wait. And here you can see you actually have new high, first entry long, second entry long, failure. Failed, second entry long, great bearish bar. Notice, ticked higher, reverse down. EMA keeps projecting. And at this point on, the bearish bias has been confirmed. You're coming off the resistance. Prices failed to go above. Notice new low, first entry short, second entry short, failure. But it is below EMA. You don't want to go long. Ticked high, reverse down, great bearish bar. Confirm the downtrend as well. And then you have a lower high confirmation setup. Another high probability setup. This was a great entry. I like taking this setup, but I didn't manage to get filled because this was too fast. The price action was really fast. When you're watching this live today, it was super fast. You had to be really on top of your game. But context wise and price action wise, great high probability setup. Notice break, new extreme, price is bouncing, almost bouncing at its support, and market is reversing. And okay, market is reversing quite strongly. So what I need to do, I need to redraw the channel. And wow, this is a very strong bullish rally. So what I'm going to do now, first I'm going to zoom out and I'm going to measure this first leg and use it as the second measure leg, okay? And you can see this is my measured move. So at this point on, I expect for the measured move to be reached. Notice, this short-term uptrend has a break new high, but I still expect for prices to create a one more leg up. Why? Because, well, this was extremely strong bullish uptrend, and there's high likelihood that such a strong uptrend we'll have a follow through even though you have a small break in your extreme. However, after we get the last leg, I'm leaning more towards prices pulling back into the trend range because overall we are in a trend range. In the meantime, I'm following short-term patterns. Notice we have overshoot, first entry short, second entry short. I cannot take any entry here. We have flat exponential moving average. This is a congestion. A lot of bars stacked right next to each other, and this downtrend is in place, so it can get new extreme. I cannot take any entry. Market is going sideways, and notice big bearish bar followed by a nice bullish bar. So there is an attempt for prices to create new extreme. Nice small little bar. After such a big bearish bar, basically you can treat it as a failed breakout at this congestion because this is a congestion. And the way you trade congestions, you fade the breakouts. And this right here is more advanced setup, but it says a failed breakout setup out of this small little trading range. Notice, smaller trading range, you broke their downside, decent bullish bar. The downtrend attempted to create new extreme. So this is more advanced, but decent setup. And prices keep pushing higher. Okay, so we have strong continuation to the upside. At this point on, we pushed way too far up for prices to go all the way down here. We have a second entry long, but the signal bar is bearish. I cannot go long. And by the time you have a bullish signal bar, it's this big. Okay, so my initial analysis, expecting for prices to go test the important key level, that's not happening. So I need to adapt. So we have bullish imbalance in the trend range. This breakout was successful. And right now we have somewhat of a bullish uptrend. So what I can see we have a possible spike and a channel pattern. We spiked, consolidated, and now we have a spike and a channel pattern. We have a small little support here. New high, first entry long, pullback, second entry long, kind of like double trap. But the signal bar is not the best. The setup is not bad. If it had better signal bar, more bullish, would have been much better. But like this, I'm being more patient. You don't get any confirmation setup decent wise after that. And notice price action is working sideways. Now we have a small break, tiny break new extreme. When I was watching this live, I didn't play with the break. I was playing it that it is still in play. But you can see there's a tiny little break new extreme. But let's say you're playing it without the break. You see spike and a channel, which right here is getting confirmed nicely. Can I take the second entry long? I cannot because the signal bar is subpar. Also, the move was quite steep. We are quite overextended. Even though it worked, notice it even was an inside bar. You would have to trigger here. Even though it worked for a scalp, I don't think you want to go short here. I don't think you want to go long here. Excuse me. I was expecting possible higher low. And notice what's happening. Prices are pushing below EMA strongly. And prices are still pushing below EMA. Okay, so at this point on, I'm going to redraw short-term downtrend when it is okay for me to go long if I expect for prices to create new extreme for this uptrend. Well, it is okay only after we push above EMA and get a failed second entry short. Because you can see EMA keeps rejecting prices strongly. This is not how the prices would be reacting if you are expecting new extreme. This is quite a consistent downtrend. So I really want to not to pick bottom and wait for prices to push above EMA to confirm that the bullish bias truly is the one valid. And nothing like that is happening. It looks tempting, but I didn't never push above EMA, and notice prices are trending lower. Okay, so at this point on, I cannot argue with the market. I need to change my analysis again. It's possible. Now you can see after the fact that there was tiny little break new extreme, but it is very difficult to identify it live because such a tiny little half-inch difference is really, you have to make the decision. And when you're gauging the structure, you can see it looked quite bullish, but you never get a decent opportunity to buy. Everything is below EMA, multiple rejections off the EMA. You never pushed above EMA with the failed second entry short, so you're just sitting on your hands patiently. And now that I see that prices retrace too much of the spike on a channel, this is indicating to me that the bias is bearish, and now I expect for prices to go and test the breakout area. Okay, I'm just going to draw the downtrend, so I need to always identify a pattern. So at this point on, you're no longer looking for new high because you retraced too far down and too much of the initial spike on a channel. So the bias is bearish. And notice we have new low, first entry short, pullback, second entry short. Now when I'm watching this, I'm going to readjust the channel a little bit. You can see it still fits nicely. It's completely okay to keep readjusting the channels as you're trading, because you're not really moving it too much, you're just tweaking it a little bit. And we have shorten uptrend, break, attempt to create new high, but two key entry points are in the way. Exponential moving average and the trend line, the key entry point, are holding, preventing prices to create new extreme. New low formed, first entry short, pullback, second entry short, big bearish bar, high probability setup, because you never want to be chasing the market at these lows. You want to wait for prices to pull back to your important key entry point that you predetermine. And this is where two key entry point merge and high probability setup appears. And notice, quick, easy scalp. So great high probability setup. I'm going to redraw the shortened channel. Notice we have a small little break, new extreme for the downtrend. So I need to be careful taking shorts. I cannot be too aggressive because downtrend created new extreme. I don't see any setup. I would need to see lower high confirmation setup because downtrend has a new low. So at this point on, I'm just waiting. I can see that we have first leg up, pullback, second leg up. How far we are to key level? Okay, we can still hit the key level. We still haven't touched it just yet. I'm going to zoom out big time so you guys can see. All right, this is the main important key level that you identified early. So you have trading range. We broke higher. You can see how the move was overextended, was way too steep. So no surprise, we reversed quite sharply. So at this point on, notice how strong the bearish bias is, and you expect for prices to come back and test the important key level. New high, strong push below EMA, uptrend played out. We already identified first leg, correction, second leg, and you push below and a nice bearish signal bar, lower high, confirming the visual two-leg pullback, first leg, pullback, second leg, lower high, high probability setup. I didn't take it. I was done with my two trades here, but this is a decent setup. Fell second entry long, looked tempting if it formed, but it never formed because you cannot sell below bullish bar. And by the time you get this bearish bar, it's way too big and it didn't even trigger. There is no one tick trigger below this bar, but even had it triggered, you don't really want to go short because this is way too big at this point on. It didn't really form well. Okay, and prices are going higher. So at this point on, the structure is not that clear because you would expect for this lower high to propel market lower, and that's not happening. You keep pushing higher. At the same time, the structure is quite bearish, so I'm not really looking for a wider uptrend like this. This is way too flat, way too wide. Can't really take it. Pretty much nothing to do. Okay, micro double top resets the count. First entry long, push below EMA confirming the bearish momentum, and we expect to get a failed second entry long below exponential moving average because uptrends played out. There is no wider channel and there is no failed second entry long. Unfortunately, it's way too far down, which I cannot take. And notice prices finally tested the main important key level. So prices are correcting. We have new low, first entry short, second entry short, not fully at the EMA. Can we get possible lower high confirming the second entry short? We cannot. We broke the second entry short, so no lower high. We are in this small little congestion. Just gonna copy it, put it at the bottom. This bar is way too big. You have no room to these lows. If there was nice lower high close to this second entry short at the highs with enough room for a scalp, you can sell at these highs, but the lower high never formed. And this bar is so big, so close to these lows, you can't take any short, and market is reversing. Okay, so we need to redraw bullish uptrend. At this point on, the bias is quite unclear because this downtrend doesn't have new extreme, but at the same time, we're bouncing off the important key level. Flat EMA, a lot of congestion. This is area where pretty much you have to be very patient, and it's completely okay to sit these areas out when you're not sure what is the bias. Because if I'm going to zoom out, look at the strong bearish bias, but at the same time look at the key entry point, the key level coming into play. So I'm just waiting for more confirmation from the market. Okay, we keep going higher. There's a possibility for wider channel like this, but it just feels too wide. It already has overshoot, which doesn't feel like. You can see market pushing higher, so another overshoot, another overshoot. When I see so many overshoots, I tend to look for steeper channels. So this was the channel that I was playing, because also notice how it fits off of these first two swings, confirming right here. And now you have prices working higher. You can tweak it a little bit like this. Okay. There's also a possibility for us to look back at the structure and notice move down, move up, move down, move up. So you can see that this is resembling a trend range. So I need to take into consideration every possibility. Prices are strongly pushing all the way back down. It's looking like the bearish bias may be the one that is going to resume, and it's going to be the stronger bias. But here is the important clue. If you have two conflicting patterns, you're observing how the EMA is going to react. So is the sideways bigger trend range valid, or is this uptrend valid? Well, if the EMA is going to hold, you expect for prices to push lower. If you push above EMA, which it did, notice this big bullish bar rejection. This right here confirm this bullish uptrend. So right here, I have new low formed, first entry short, pullback, second entry short, failure. Great signal bar, great high probability setup. Main uptrend needs to get new extreme because it was confirmed after this big bullish bar. A new high was made for this uptrend, so I expect correction or possible reversal. For that reason, I cannot take second entry long. But notice, market keeps pushing higher. So this point on, okay, we didn't reverse after new high, and this is looking quite bullish. So many high highs, so many high lows. So what I'm going to look for, possible another divided channel. This was the channel that I was looking for. I'm just going to copy it, put it at the top. And notice how nice it's fitting here, and it is fitting here. So I'm just going to temporarily delete it, so I have a cleaner structure. At the same time, I'm going to redraw the correction. We have new high, first entry long, pullback, second entry long. And notice it's confirming the channel, which is a great sign that this channel may be valid. Two-legged pullback, but notice the bar is way too big and it didn't even trigger. There was a bearish bar after that, so there was no trigger. And I have a new low, first entry short, pullback, second entry short, failure. If I'm going to count it from the very low right here, basically the second entry long was also high low. So this right here is a decent high probability setup. I'm going to treat it as a failed second entry short, resetting the count after very low right here, because this low is slightly higher, 1 or 2 ticks, than this low right here. This is the lowest low in this correction. First entry short, second entry short, failure. You're selling at these highs. Is that a worry? It is not, because structure is bullish uptrend, EMA is holding, and the key entry point is holding, and a lot of sellers are going to get trapped selling at these highs, but they're all going to get trapped and market continue pushing higher. Notice here I brought a similar setup that I discussed with a trader earlier. We were discussing this failed second entry short, new low, first entry short, second entry short, and trader was also worried about going long at these highs, basically into resistance like this. But no, if you're in a confirmed uptrend like this, you can actually take advantage of sellers looking for some sort of a tangible resistance to sell, but they're going to get trapped because EMA keeps holding and the overall bias remains bullish. The same scenario almost happened right here. All the sellers got trapped on a larger second entry short, and a failed second entry short was a high probability setup. So as the uptrend is bullish, I'm looking for high probability setups to buy at important key entry point. I'm going to redraw the corrections. I cannot take second entry long below EMA like this. There was no trigger above this bar right here. Break new low. First leg down, second leg down, indicating the bearish bias played out. Okay, so what is right now the high probability setup? If I'm going to zoom out, this nicely fitting uptrend needs to get new extreme, and I expect for prices to create new extreme. So the high probability setup for me to get new extreme is going to be a failed second entry short above exponential moving average. I never get it here, but I'm not changing my bias. I'm still thinking new high. And notice, okay, this is great sign, strong push above EMA, 2 legs to new low. There was the last finishing leg, first entry short, pullback, second entry short, failure. Notice the first signal bar is not ideal, but the second signal bar following after that closed at the same high level. So you can basically treat it as a confirmation. And this right here is a great, great high probability setup. Failed second entry short. At the EMA, trend line is in play. Big channel needs to get new extreme, 2 legs down. and this would have ended up being a losing trade. Nothing you can do. This is a great high probability setup following the rules that comes with the territory as being a trader. And now you have another leg down and you're expecting the same thing. Okay, just because you get stopped out here, that doesn't mean you're changing your analysis. Analysis still remains the same. You still expect new high. In fact, you even bottom here. So I'm going to redraw the channel and I'm expecting to get the same pattern. Failed second entry short or possibly second entry long. Can I get it? I only have first entry long here. I don't get second entry long at the EMA, and market just created new extreme. Okay, so that's unfortunate. You got stopped out here without having a decent high probability setup follow-up, but that can happen sometimes. There was an easy price action at the open, but a little bit difficult price action at the close right here. Okay, so new high has been made. So we expect correction or possible reversal. For that reason, I have a second entry long, which I cannot take. I need to have high-low confirmation because I just had new extreme. So there may be a correction or possible reversal. There's a break new low. I expect to get a failed second entry short. If I'm going to go long, I don't get it. New low. Going to do it like this. First entry short, can I get failed second entry short? I cannot. I'm already bouncing off of these highs. We are in a smaller trend range. You can see how flat EMA is getting. And no setup form, really. No way for me to enter. And we keep pushing higher strong. Okay, so at this point on, I need to analyze the structure. Because we have multiple pushes to new extremes. And once you see so many pushes to new high, that means there is possibly a wider uptrend in place. So I'm going to look for some pattern like this. Okay, this fits pretty well. Can I get some decent high probability setup? Let me see. Short-term downtrend play. I have a new high, first entry long, pullback, second entry long. Then we sort of have high-low here, but didn't really form that well. Not touching the EMA fully. You expect to get a failed second entry short, but it's stacking. It didn't really form that well. You can't really take setup like this EMA in one of these bars. This is a second entry long, but it really looks weird. The signal bar is not that great. Just looks odd. EMA is flat. It's getting too stacked. You don't want to enter here. You expect for prices to truly confirm this main important key entry point if you're going to take any setup. I'm going to redraw a channel. Break. Attempt to create new high. Okay, and we're bouncing. Okay, now I'm expecting to get a failed second entry short because this main channel has new extreme. We have a high low that is far away from EMA, way too high up. I cannot buy. Can we get a failed second entry short? We have it, but it's too far from EMA. It's not even touching the key entry point. And it ended up working, and market keeps working hard. And now market is closing. Very little setups at the very later part of this trend, but there were so many setups early on. The beginning session was extremely easy, especially this right here. This was the textbook price action, and you can be done within the first 10 minutes. So this is really your dream, to catch all these easy high probability setups. Eventually you can see volatility picked up. There are a couple of these areas without a decent high probability setup, but you just need to wait it out, and then eventually, you know, the bias will resume. You will get a cleaner structure and you will get a cleaner pattern that is on the chart, and your goal is just to wait for the pattern and to identify it and not to rush into trades in the meantime.